Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and on this special edition, our focus is on the Q3 earnings, and the company on our radar today is Patel Engineering. The company has reported a multi-fold jump in its consolidated net profit in Q3 to the tune of 70.2 crores, and it had clocked in a profit of 19.4 crores in the October to December period in FY23. So on a year-on-year basis, there is a sharp jump on that account. Even the total income, that's risen to 1,076 crores from 980 crores that was seen a year ago. The expenses have stood at 1,030 odd crore rupees in the reported quarter. That's also gone up when we compare on a year-on-year basis as well. To detail for us the key insights from this quarter as well as an outlook going forward from here, I'm now joined by the top management of the company. Kavita Shirvaikar now joins in. She is the whole-time director and CFO of Patel Engineering. Kavita, welcome to Business Today Television. It's good to have you with us. Well, good results, especially on the profitability front as well. A multi-fold jump is what you've posted. Help all our viewers first understand what have been the key factors that have driven the growth on the bottom line for you in this quarter, and does this kind of a growth look sustainable from a medium to long term perspective?
Thank you, Sakshi. Thank you for having me on this show. As you mentioned, our revenue for the quarter is around 1060 crore. And EBITDA margin, if you see quarter on quarter, we have been consistent in maintaining. We have estimated given around 13 to 14%. If you see for the quarter, it is around 13.7%. And net profit is 70 crore as compared to earlier, it was 20 crore. So there are many factors was contributed to the profitability of the company, like cost cutting, strict monitoring at the site, everything. Going forward, we are confident, fairly confident to maintain EBITDA margin of around 13 to 14%. This is because mainly we have a strong order book. Around 19,000 crore is our order book. 60% is coming from hydro sector, where the profitability margin is a bit on the higher side. Around 21% is from the irrigation sector and balance from other sectors.
Okay. Now tell us, Kavita, what's as far as the margins are concerned, where are you at currently and where do you see the margins headed going forward? Is there a particular band that you expect your margins to be at over the next few quarters?
Over the next few quarters, we are fairly confident we should be able to maintain EBITDA margin of around 13 to 14%.
Okay. And what about the revenue outlook? What are you at in the current quarter? We already know that 1,076 crores. But from here, where do you see yourself growing to?
We are fairly confident to maintain a growth of around 15% quarter on quarter, year on year basis.
Okay, fair enough. Let's now talk about a little bit on the orders front as well. Could you detail for us what was the kind of order inflow you got in this quarter and new order wins that you had, and where has it taken your entire order inflow for the fiscal year right now, and going forward, what is the kind of outlook?
Sure. Our current order book is around 19,000 crore. 60%, as I mentioned, it is from hydro, 21% from irrigation. For the current financial year, 9 months, we have received a LOA of around 3,500 crores, which were L1 prior to other quarters. Going forward, we see there is huge opportunity available, the sector where we operate in. Like coming to, we have seen in budget, 11 lakh crore outlay allocated for infrastructure itself, which is 11% higher than last year. Which is 2.4% of the GDP itself. So we are positive. We were expecting order book to increase much more faster pace, but because of election, it is a little bit subdued. Post election, we expect to it is to grow substantially. like large hydropower projects is coming up. We see hydro itself, there is a 2 lakh crore opportunities coming up. Irrigation around 70,000 crore and tunneling sector another around 50,000 crore. So all put together, there is huge opportunity available and we expect to grow our order book. Post-election, definitely we see the major movement post-election. So we are expecting around 10 to 15% growth in order book and revenue is around 15%.
Okay, so where exactly? I believe earlier Patel Engineering has guided for a 25,000 odd crore rupees of an order book as well. By when do you see that achieving?
By March 25.
By March 25, you'll be able to achieve that. Fair enough. Also, tell us, in terms of the current orders, how many of those orders are you at an L1 bidder stage at this point in time? What is the unexecuted book right now, and where do you see the execution headed now?
See, till December, we were L1 in two projects where our share is around 164 crore. Subsequently, current quarter, we have received the LOA. So now we have received all the LOA. And further projects are in pipeline, which we are bidding.
Okay, fair enough. Tell us, geographically, where exactly are you focusing on these projects currently? Are you also expecting with the rise in focus, just like how you correctly pointed out, the government is clearly focused on capex outlay, infrastructure, renewable energy, all of these things are being talked about even in the recent budget. These were the clear focus areas. How do you foresee for yourself the kind of focus that the government has in these spaces to translate for your business going forward?
See, we are well poised to take the advantage of the growth. We are in an advantageous situation because our PQ is strong. Pre-qualification, which is required for the bidding for the future projects, it is strong. We have our employee base also. We have a qualified employees. We have strong employee base. Our employee base is around 4,500. Our equipment base also is around 1,100. We have implemented SAP system across all project sites. So better for better monitoring and control. And we are fully prepared to take the advantage of the coming forward where the infra growth story is there. We are fully geared up to take that kind of projects.
That's wonderful. Help us understand a little bit on the working capital requirements that you have, the cash on the books, the debt that you have currently, a little bit on this picture, and where do you see these parameters headed?
See, our debt consolidated is debt is around 1,900 crores. If we coming to the breakup, around 1,200 is working capital debt, around 700, 800 crore is the term debt, which will get repaid over the next 3 to 4 years. So we see going forward that debt will reduce. But for the growth, we might need to increase working capital debt. So overall, we see debt remain more or less will remain, which is now sustainable, will remain in the same line. Though we are in growth phase, we will grow, but net to net our debt will not increase.
Okay. Any fundraise requirements that you may have going forward from here, that we may also hear from you in the upcoming quarters?
We are exploring if we can raise some funding through equity
Through equity you are
to
planning.
fund the growth.
Okay. And that would be, what would be the timeline at which you are looking at?
It depends on the market because we have taken the board approval up to 500 crores. So it depends on the market, but we see in 6 month timeline.
What route would you be planning? Would you be planning a rights issue, or what exactly are you looking at?
Uh, we've decided inter qualified QIP route.
Okay, fair enough. All right. Many thanks then, Kavita, for being with us on this special edition and sharing all these wonderful insights from your quarterly earnings. Robust set of numbers. The stock market has reacted positively to your stock as well. And this is one stock which has really performed very well over the last 6 months. The stock has given a 40% return. Over the last 1 year, it's a sharp jump of 409 odd percent. And since you're positive about the growth phase and the continued expansion that you're looking at, and positive about the pipeline on the orders as well, looks like it is going to be a positive trend even going forward from here. Many thanks for being with us onto this special edition.
Thank you, Sakshi. Thank you, Sakshi.
All right. With that, we will wrap up this very special conversation with Patel Engineering. Robust set of numbers, and the company may also be looking at fundraise through equity going forward from here. So that will be an important part to keep in mind. And they are very confident of emerging as L1 bidders, and of course gearing up for the expansion plans that the government has in terms of infrastructure and even the renewable energy projects. Those are some of them that they are looking at growing with. Going forward from here. Do stay tuned on to Business Today Television to catch all the updates from the world of business and stock markets that follow on from your screens as well.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 32nd anniversary issue explores India 2029, the 5-year agenda, with industry titans sharing exclusive insights. So, just BT it for unparalleled perspectives. Business Today, 32 years of leadership, innovation and business brilliance. Subscribe now. In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Hello and